The Doge community, I think, is somewhat irreverent, obviously, and has great memes and loves dogs, and I love dogs and memes, and it doesn't take itself too seriously, and I think there's Occam's razor, which is the simplest answer is the most likely. It's a summary of Occam's razor. The simplest answer is the most likely one. Then there's a friend of mine came up with a variant on that the most ironic outcome is the most likely one. And then I have a variant on that, which is the most entertaining outcome is the most likely one. So if that is true, then the most ironic and entertaining outcome would be that the cryptocurrency that was started as a joke to make fun of cryptocurrencies ends up being the leading cryptocurrency. That would be the most ironic outcome.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you're all having a wonderful week so far. Let's get right into today's episode. The price of Bitcoin briefly fell back below 30K again yesterday, but while recording this video has gotten a bit of an oversold bounce back up to test former support right around $32,000. Now, I'm pretty sure that you're going to hear a lot of hype around crypto YouTube today about how this is the end of the bear market and that the $28.6 thousand low on the 22nd of June was the bottom. Now, while that's not impossible, I would not consider it a very probable scenario. What we're likely seeing here is just a bearish retest and confirmation of the new resistance before Bitcoin heads a little bit lower. Now, back in March, prior to the $64.8 thousand all-time high, when everyone was just so damn sure Bitcoin was headed straight to 100K, we were calling for the reversal, pointing towards the DXY and the 10-year rate as potential leading indicators. Now, in the last two episodes, we went over the importance of the DXY and the 10-year rate in forecasting Bitcoin's price and went over some pretty interesting similarities to price action we saw in 2019 and early 2020 to the price action we are seeing right now. Similarities that may suggest we're potentially heading towards another massive market sell-off. Now, I don't want to be too speculative here, but the price action we're seeing in the S&P 500 and the DJI are really fitting these puzzle pieces together, possibly accounting for the bullish momentum we're seeing in the DXY and the falling 10-year rate. Adding confluence to this idea is the news of a pretty reliable contrary indicator. You've heard of the saying, be fearful when others are greedy and greedy when others are fearful, right? Well, how about bull markets are built on optimism and die on exuberance? The massive amount of leveraged positions opened by hedge funds over these last couple of weeks is nearly 40% net long. Quote, smart money's greed has led to a pretty damn serious risk appetite and the fear of missing out, showing that the mania phase of a bull market is not just for the retail investor. These massive inflows of capital point towards some serious overconfidence in the Fed's ability to keep these markets pushing higher, ignoring the fact that these markets are massively overbought, setting the stage for a pretty epic market crash. Taking a look here at the DXY on the daily chart, it does still look pretty damn bullish, and we are expecting the bullish momentum to continue beyond the 200 weekly exponential moving average, pushing well up in and above the 95% level on this index. The 10-year rate is getting closer and closer to that 61.8 retracement level of this parabolic structure, which is just above the 1% level, a critical area that will give us some pretty clear insight into the direction of not just the price of Bitcoin, but the overall health of the US economy and the dollar. Now, something we've been hearing quite a bit about over the last year or so is inflation. And last week, the CPI, or the Consumer Pricing Index, came out and it was quite a bit higher than expected, its highest levels in almost 13 years. Excluding the volatile food and energy components, the CPI accelerated almost a full percent After increasing 0.7% in May, core CPI surged 4.5% on a year-on-year basis, the largest increase since November of 1991, after rising 3.8% in May. Now, while these numbers are a bit alarming, the inflation argument just does not fit here. This widely perpetuated narrative of inflation has been and is still something I am incredibly suspicious of. Now, while it's true that we have seen an insane amount of money printed over these last 18 months, this money has really not made it into circulation, and the rising prices we are seeing right now are not the result of inflation, but the consequences of a number of supply chain issues that really came with shutting down the world's largest economy for an entire year, a trade war with China, an overheated housing market, and corporate bad actors who stand to profit from inexplicable higher prices. Now, if the inflation narrative were true,
no way. Not this time. We created it. Not this time. No, not this time. It's totally made up. Pure fiction. It's fiction. It's fiction. We made it up. We made this one up.
Not only would the DXY be falling like a rock, but the 10-year rate would be rising pretty quickly as well, and it's highly likely that the price of Bitcoin would be rising right now too. Either way though, both extremes can lead to serious economic problems, but what we're seeing right now is just not inflation.
We made it up. We made this one up. It's a made-up tale.
Which increases the risk that we're nearing a stock market sell-off. Now, if you remember back to early 2020 when the markets crashed, it took Bitcoin and the entire cryptocurrency market down with them. It's pretty well understood that Bitcoin is tightly correlated to the S&P 500, and when traditional markets tend to sell off, investors or traders need to cover their positions one way or another, and one of the ways they do that is they sell their cryptocurrency to cover their positions in the traditional markets. All right, so just to recap here, we are looking for a rejection here at this 55 weekly and then a move further to the downside. We are expecting a bounce here right at 22,157, and again, should we see price action fall below that, then we are looking at a $17,000 Bitcoin, possibly breaking below that all the way down to the bottom of the CME gap down here at 11,110, and then possibly, not likely, all the way down to $9,615. Now, if we do break this 200 weekly exponential moving average, that could spell trouble for Bitcoin, but we haven't gotten there yet, so we'll cross that bridge when we get there. And just looking at this DXY, it does look bullish heading into Thursday. The Dow Jones Industrial looks bearish heading into Thursday, and so does the S&P 500 heading into Thursday. Now, the 10-year rate did get a bit of a bounce to the upside here, likely just coming up and confirming former support, now resistance, before moving further to the downside. That's it. That's all I got for you guys today. Thank you so much for dropping in and sticking with me until the end. Don't forget to like, don't forget to subscribe, and don't forget to join that free Telegram group. The link is in the description below. If you're interested in learning technical analysis, or you just want to join the members only Telegram group, go ahead and head on over to our website, 3candlecollective.com, and submit your information today. We are giving away some special free access passes to our technical analysis basic training course. Again, it's 6 chapters, it's 44 videos. You can get through all of this at your own pace. Each chapter has its own chapter PDF, and there are a ton of useful resources in here, especially for the new trader. Again, that's 3candlecollective.com. Thanks for hanging out with me, guys. I'll see you all in the next video. Peace.